over the past month, we've had almost a subtle but monumental shift in terms of the ECB's guidance around how it views inflation. I think the new inflation framework is very important because it makes things a lot clearer. We know now it's 2%. We know there will be some tolerance for above 2%. And we also know today that it has to, actual data points have to print around 2% before the ECB even considers tightening. So I think, we've had a huge change in the reaction function. And I think the markets have broadly adjusted to that. We've seen, obviously, the euro falling in recent months. We've seen bond yields coming off their highs. So I think, that dovish repricing has largely been calibrated in markets. And I think to some extent, it is, the bar for tightening is a lot higher. So for us, it's a flatter curve. Probably expect, still some rate hikes that were priced in around mid-23 to be priced out and pushed out. I think the catalyst here probably, dovish comms from today and equally disappointing data in the next couple of months. But broadly speaking, the market is now a lot clearer of where the ECB stands in its reaction function and what it will take to generate tightening and meaningful tightening that matters for markets.
Well, Viraj, I think no doubt about it, the key focus for investors today is that forward guidance around rates. But the other key piece here over the coming months is what happens to PEP and APP as we enter the next phase of the crisis. I didn't detect any major changes today in terms of the communication around PEP or APP. But how do you think about the medium-term impact of the new strategy on PEP and APP? And do you think that we're going to see the ECB start talking about scaling up the asset purchase program as they think about tapering PEP?
I think that probably is the balance of risks. I think over the next 6 months, heading into December, we'll probably hear more talk about what life looks like after PEP. And I think the markets certainly are now expecting some increase in the APP purchases beyond March 2022 next year. How long that is, that's all up for debate, depending on how disappointing inflation comes in the next 3 to 6 months. But broadly speaking, you can imagine that the APP continues for a further year, and that in itself is some stimulus continuing to provide. Based on our estimates, if you look at historically, core inflation has only averaged 1% in Europe over the past 10 to 15 years. The ECB are talking about 2% here. The only way to achieve this, at least from the ECB's perspective, is fostering accommodative monetary conditions for as long as possible. And I think that's the key role for the ECB over the next 2 to 3 years. And part of that will be ongoing stimulus in the form, whether it's in bond purchases or strong forward guidance in preventing any premature tightening, at least in the front end of the curve. I think that's all to be expected in the next 12 months at least.